What's going on, guys? Vinny here again. We are doing these lives a lot more often just for the simple fact that there's just so much going on that it is impossible not to pay attention to what is going on. So, with that said, we're going to get straight into it, guys, and discuss how short is the short squeeze. How short can is the actual short squeeze itself? See, today, actually, at the moment that we speak, we'll take a live look at the chart right now. We'll see that, wow, wow, guys. If you let's show this right now live because this is actually this is something else. Wow. So GameStop. If you guys look at the chart, remember where it was yesterday? Actually, I can play it back for you. I'm gonna play it back for you guys. Wow, this is something else. So take a look. So all of the current events for GameStop have happened over the past week, right? If those of you remember, everybody started buying into a GameStop about 5 days, 5 business days ago. Obviously, the stock market's only traded Monday through Friday. So we can see the huge surge in price in GameStop stock start as early as January 21st, right? But there was a lot of confusion as to what was going to happen. So when news announcements came out, this is when you started to see the price skyrocket from 41 to 64 back on January 22nd. And then that's when price shot up to 155 bucks. A lot of people cashed out. And then this is where the real squeeze happened, right? The real squeeze when it shot up from from 87 bucks all the way up to 480 bucks in a matter of only 1, 2, 3 business days. This happened over the course of just over the course of a few days. So let's just play this back. I'm going to show you guys how the markets had interacted, let's just say back from January 26th. So as you'll see, you see that people started buying into the price of it. And as you can see, as contracts were being exchanged, you see a lot of brokers that were being pressured to buy more stock because they were stuck in their shorts. They were forced to continue to buy even more stock. So they continue to buy more and more and more. And then because of the pressure that they felt to buy more of that stock, and not only that, you have the mania of everyone buying into GameStop, the price shot up at market open. In fact, why do we see this huge gap right here? For one simple reason, guys. This gap occurred because this was right after market. So after market hours, you have a lot of activity, a lot of people who were trading right in that area. Let me see if I can get you guys a a quick drawing chart here. I'll pull up a little drawing tool. I forget what the drawing tool is. Let's see if this will do it. Yeah, well, that's close enough. So you see a lot of buying activity happening in this area. And so this was all happening during market hours. In fact, if you don't believe me, let's take a look at let's just take a look at the hourly chart. And you guys will see all right. Oh, this thing is doing all crazy stuff. All right now. So not what I intend to show you guys here. Just a bunch of lines that I'm drawing on the chart. All right. So let's get back to business. Let's take a look at this on an hourly chart. Okay. So look at all this crazy volume going on. All right. So if we just rewind, right? This is still going back to January 21st. Before we even rewind here, just take a look at what's going on, right? So the surge in price happened right here. So these were after market hours. As you could see, 14:30 the time. This technically was this hour right here. This was 20:30. So we're talking about, in military time, that's about 8:30 p.m. Where you see that, that final report. Then you start to see, just around 14:30, you see the price just shoot up in price, essentially. So right in between the evening to the morning to the day, you see the price of GameStop just go to the crazy levels. So that's at 2:30, 3:30, 4:30, 5. So you have basically a lot of people getting into the market right here. All of this that you see here, let me pull this up for you again. So all of this is people buying into the stock during the evening. So once that happens, right, and they saw this huge gap, this huge gain that they got, a lot of people cashed out. So you see the activity, people cashing in, people buying in, people cashing out. And then all of a sudden, hedge funds start to catch on, right? And there's another huge short, right, dropping the price down again, right? So, and that activity continues over and over and over again, all the way till today. So you see that the retail trader, are these guys who are buying in, they're getting in the little stock, right, in this little space, because they put in 20 bucks, $100 into the market, but then you got the hedge funds, they're just shorting it. They got plenty of money. They don't care. So you keep seeing they just continue to drop the price down. Now, what's another analysis for this whole thing? Well, let's just say that during all this process, a lot of people were just starting to cash out. As you can see, just going down here over time, people started to cash out. And what happens in this area, what you notice during the 200 range, remember the price was all the way up here. It hit almost 500 bucks. So what starts to happen down here at the 280 price, and then when market opened again right here, at about 120 bucks, this was February 2nd. Today, this is where the paranoia starts, right? Because a lot of people were riding on their profits up at about 500 bucks. And because they got greedy, because they don't have the knowledge and the education, a lot of novice traders that are up at this level thinking that the stock is going to maintain there, that maybe they'll keep driving it up. Well, they took the risk and they rode the price of the stock all the way down. And because they felt the pressure that they lost that whole gap, then once they got here, they panic sold. And because they panic sold, then the price got all the way down to 90 bucks, guys. Let me show you what that looks like on a larger scale. And this is going to blow your mind. Okay, when I saw this, and I just literally saw this as I tuned in here with you guys. So this is a day-to-day chart. Okay, daily chart. This thing really wants to draw for me. Now, if you guys remember, let's just take a look at what happened over the past week. And if you recall, this is what happened over the course of a week. A lot of people got in, started buying shares of Gamestop. This was back in January 19th. And then what happened? Started driving up the value of the stock. January 25th, right? You see a bunch of price fluctuation, reached magnificent levels all the way up to 350 bucks, going all the way to 400 bucks. Oh, and then a lot of people cashed out. And then a new insurgence of people pushing the stock up. And yesterday we ended right here. A lot of people were upset. A lot of people losing money, right? Even the hedge funds, investors, right? A lot of retail traders, a lot of people losing money right here. A lot of people made money and they cashed out. And then what happened today? Well, we're back to where we started. Actually, worse than where we started. And if you look back far enough, guys, what you will see is historically GameStop stock has always traded at about, if you remember the levels I showed before, GameStop stock has traded at about a comfortable, and I left the line here for you guys to see, somewhere around a comfortable $64. That's been its all-time high. And look at where it is now. Oh, what a coincidence. See, when you understand the technicals and you understand it's just above, just comfortably above that level, guys, it's right clear as day. So if you knew this and you saw and you understood that the market works in waves and patterns, in supply and demand, support and resistance, the essentials of the market, you would have been able to predict that this activity would have happened, especially since there's no fundamentals that back that this will happen. But look, it returned immediately to its price in no time. Took a lot of people out of the market. You know what's crazy? Same thing's gonna happen with silver. I had a friend who reached out to me earlier today, and he saw one of my posts, and he says, "Hey, Vinny, I saw, looks like you own some silver. Just want to let you know you got to watch it because it looks like silver is gonna drop." And guess what, guys? It will. It will, because a lot of people who bought the derivative of silver, which is the ETF, which is basically just a paper that says that you own silver, but you don't actually really own silver. And most people who are really buying the silver ETF right now, we can even take a look at it if you want, right? You could see that the Wall Street bets, they're definitely driving up the price. So even if you don't own, that is a big red bar, guys. That's a big red bar. I didn't even know that. Wow. just yesterday was at 30 bucks. It dropped down to $24, stabilized at $24.54 today. Guys, guess what the price was before this whole hype about Wall Street bets? It was at $24. What goes up must come down eventually, guys, especially when it doesn't have a strong foundation. And these speculative risks and trades and Reddit groups and Reddit raiders, that's what they created. Just simple gravity. And gravity has a big impact on the market. Now, that's the silver ETF. Now, when he told me, hey, Vinny, you got to watch it with silver, it's going to crash, which looks like he was too late, already did crash. I told him, hey, I'm not worried, buddy. You know why? Because I bought silver all the way over here. Hold on a second. I bought silver all the way over here. And you know what? I am not worried because I didn't buy silver with the expectation that it was going to go up in value. Remember, my friends, I bought silver with the expectation that one day when these dollars that we're exchanging aren't worth anything because all paper currencies go to its intrinsic value of zero and we don't have anything else to exchange of value, then I will still have my silver as a store of value. And that's why I did it. So I bought real physical silver. And that's why I feel like I am protected from all of this madness going on. And you should too, guys. So if you want to learn more about how to build healthy financial habits that will protect you against any economic cataclysmic events, then make sure to reach out to me. Comment, like, subscribe below. And check out our university. I left the link below for our university. Right now I have a promotion for those of you who are looking into learning how to invest. You can get in simply for the first 30 days. You get in with only $99, and we'll teach you everything about every single type of market, from stocks, crypto, forex, the commodities, uh, the S&P 500, many of the indices as well. Not only that, we have a credit building system. We have a full-fledged platform education system, alert system. We have AI technology. There's so much behind it. Not to mention a wallet. Really cool card that you can use, preloaded with crypto. You can use to spend anywhere Visas accepted around the world. Discount, travel discounts, all this bunch of stuff, guys. Check it out below. It is packed with value. Again, this is Vinny, 8 Figure Vision. And guys, take care of yourselves.